If you want to know the secrets to amassing a $15 billion net worth, then this is the video for you, because Ray Dalio, founder of Bridgewater Associates, a hedge fund with over $160 billion of assets under management and a personal net worth north of $15 billion, is serving up the secrets behind his multi-billion-dollar investment strategy. Between you and me, it takes over $100 million, that's 9 figures, just to get on his schedule and pick his brain. So consider this video a $100 million discount that just might make you life-changing returns if you watch it in full and implement every single strategy in Ray Dalio's proven playbook. Regarding that holy grail investing strategy, Ray Dalio chalks it all up to one thing. In order to make big money in the markets, you have to bet against the consensus and be right, which is a difficult thing to do. You know what else is difficult? Making sense of that somewhat vague piece of advice enough to make a multi-million-dollar positive dent in your net worth. Yep, we said it, Dalio was holding out on us with that cop-out piece of advice, and we need the real meat behind his multi-billion-dollar returns in order to give you guys some meaningful value. Therefore, that's exactly what we've done. We've dug through hours of interviews, passed all the most valuable, actionable nuggets of wisdom, and removed any fluff because we value your time and want you out there implementing these tips. Not scratching your head wondering why you haven't found success betting on that controversial company that fell off and became a penny stock just after you sunk $4,000 into betting against the consensus. But don't feel bad, because according to Ray Dalio, we're all wrong sometimes, which is exactly where his secret formula comes in. So without further ado, let's get right into spilling Ray Dalio's top 6 pro investing tips for 2024, starting with secret number 1. Even the best investors undervalue this critical factor. Knowing how to diversify well is more important than anything. It's even more important than picking the best investment, since there's still a level of risk, and even a great investment can lose you money in a given year if you're not diversified. See, you shouldn't feel bad that you didn't pick that one right stock that was supposed to make you a billionaire, because according to Ray, picking the one right stock pales in comparison to properly diversifying. Why is that? We'll explain more later, but it has a little something to do with the psychology of investing, and it's linked to gambling at a casino. Let's just say the same people who go all in and find themselves up $20,000 in 1 hour can just as quickly lose it all the next, and according to Ray Dalio, it's almost a given you'll get fully wiped out by one of those overconfident all-in investments that may spike, but then go to zero before you can say short. That brings us to secret number 2. This is the key to making a fortune. All you have to do is find 15 or 20 uncorrelated return streams to diversify and balance risk in order to keep your return the same, but lower your risk to 1/5 of the risk had you not been so diversified. You'll still get to the same return, but you'll do it with a lot more certainty and less likelihood of losing money. If you don't do this, you may still make money for a while, but at some point you'll likely get knocked out of the game, just like going to a casino and going all in on one round. That's secret number 3. I don't invest when I'm wrong. I'm so scared about being wrong that I don't invest in things where I really don't know and think I may be wrong. There's more information we don't know than we do know, so we should leverage what we do know and be aware of what we don't. In other words, it's important to know when not to take a bet. This tip is interesting because it hammers home just how much time, research, and internal team debate or intellectual disagreement, as Ray Dalio puts it, takes place before his team pulls the trigger on an investment. It seems there are far more speculative assets they shy away from than you'd expect, and they may be much slower to enter a new market than more impulsive investors who chase new trends in hot industries or skyrocketing companies. Number 4. Embrace the reality of your weaknesses. Ray says to dump your ego, learn from your mistakes, and most importantly, understand and embrace your weaknesses so they don't constantly get in the way of your investment decisions. If you don't have a well-rounded team of fellow investors to help bolster your research and offer a multifaceted discourse ahead of each investment decision you make, it may be difficult to avoid succumbing to your own weaknesses that may influence your investing behavior. Therefore, it may be worth forming a group of fellow investors who come from a wide array of mindsets, approaches, and personality types to help temper your decision-making and offer other viewpoints off which to bounce your own. Maybe we should start our own investing cohort mastermind here at Early Stage Crypto for just that. What do you guys think? Let me know in the comments below if you'd like an investing cohort of fellow early-stage investors, and if this video gets enough likes and comments requesting that, perhaps I'll roll out something of the sort so we can all join forces and increase our returns in tandem. Speaking of increasing our returns in tandem, there's one massive event we'll all have to weather in order to do so, and that brings me to Ray Dalio's secret number 5. Be prepared for paradigm shifts. Approaching 2024, Ray Dalio admits that our world and economy is changing radically, and it's going to change even more radically every single year for at least the next 5 years. Due to a variety of factors, from political tensions to geopolitical shift to the accelerated disruption of artificial intelligence and new technology that is exponentially changing the world as we know it. Thus, it's crucial that investors be aware and prepared for these paradigm shifts, as Dalio's strategy revolves around the idea of being adaptable and open to change in the financial markets. Dalio suggests that investors should anticipate and embrace shifts in economic trends, technological advancements, and global events that can impact their investment portfolios. By being prepared for paradigm shifts, investors can capitalize on emerging opportunities and mitigate risks associated with sudden market changes. Let's be honest, none of us saw the pandemic coming, but once it came, there was a ton of opportunity created seemingly overnight. The same could be said of artificial intelligence, or if we rewind the clock, the internet or YouTube itself. By keeping a finger on the pulse of the newest tech and its rippling effects throughout the country, economy and world, we can grant ourselves the opportunity to just maybe jump on one of those new trends that will be the Google, Amazon, or Facebook of the future. But let's be honest, stocks are risky, and if we put all our eggs in that basket, there's a chance we win big, but there's also a great chance we lose. This next secret, pro tip 6, is the one move that could actually keep you on the positive side of returns 85% of the time, even when the economy is crashing and the whole world is on fire. How do I know? Because it's been tried and back-tested over the past 75 years of the markets, and it's consistently outperformed every other strategy, which is what's kept Ray Dalio's performance so outstandingly positive. For example, this secret is why even during the 2008 financial collapse, Ray Dalio's portfolios were only down about 4%, where the rest of the markets on average were down 51%. Isn't that crazy? Okay, that's enough build-up, let's get right to it, onto secret number 6. The all-weather portfolio is the only way to thrive in all 4 market scenarios. Ray Dalio believes there are only 4 market scenarios: inflationary, deflationary, expanding, and contracting. He also believes that the all-weather portfolio is the asset allocation trick to thriving in every single one of these economic environments, which are of course out of any individual investor's hands. So, while you can't choose the current economic environment we're in, you can choose the individual assets and the overall portfolio allocation for your investments, and Ray Dalio believes that's the secret to consistently winning with investing. So let's break it down: 30% stocks, 40% long-term US bonds, 15% intermediate US bonds, 7.5% gold, and 7.5% commodities. It's not balanced equally with money, but rather balanced equally with volatility and risk. Now, what if you wanted to build that portfolio using only ETFs? If so, this is exactly how you do that. VTI Vanguard US Total Stock Market. TLTI shares 20-year Treasury bond. II shares 3 to 7-year Treasury bond. GLDSPDR Gold Trust. GSGI shares S&P GSCI Commodity Index. I know, it looks bond-heavy and stock-light, but remember guys, Ray Dalio is all about balancing risk, not just dollars. And with this proven strategy, you'll be able to succeed financially in both the economic highs and lows of the world, which we're all bound to endure at one time or another. But hey, Ray Dalio isn't the only great investor out there, and if you aren't sold on the all-weather portfolio, you may want to check out the 9-step strategy that made Warren Buffett his billions and could offer a simpler, though less exciting playbook. If so, click right here for the 9 brilliant pieces of investing advice from Warren Buffett's most iconic interview ever.
Can you do any better on salary?
Unfortunately, that range is set at corporate.
What about mileage when I use my car? I mean, gas ain't cheap, you know.
Until then, we'll be here serving up the best investment advice from the greatest financial gurus around here at Early Stage Crypto.